Dubai property is not crashing. It is getting smarter. And for serious investors, that may be the best kind of recovery. If you want Astra Terra Properties to build a sharper Dubai shortlist around ready homes, near handover units, or income-led opportunities, message us on WhatsApp early. Recovery phases reward the buyers who move before the market feels comfortable again. Welcome to Astra Terra Properties. In this video, I am breaking down what Dubai property market recovery 2026 really means, why prices easing in parts of the market is not the same as weakness, and how rental demand is still holding the structure up underneath serious assets. Let's start with the headline mistake. A lot of people hear that prices are easing or that transaction volume slowed, and they assume the opportunity is over. That is the wrong read. In many cases, what we are seeing is a market shifting out of pure momentum mode and back into pricing discipline. That matters because disciplined markets often create better entries than euphoric ones. Recent reporting around the Dubai market pointed to a softer transaction pace in March, with volumes reportedly down by around 20%, but without a broad collapse in pricing quality. At the same time, buyer appetite did not disappear. Coverage also highlighted that roughly 45% of buyers still plan to purchase within the next 12 months, while around 60% preferred ready homes. That is not panic. That is selectivity. And selectivity is where real investors can do better work. When I say recovery, I do not mean a dramatic V-shaped turnaround from distress. Dubai is not behaving like a distressed market. I mean a cleaner reset in expectations. Some overheated pockets are seeing less emotional pricing. Buyers are pushing harder on value. Ready stock is getting more attention. Rental depth is separating useful assets from weak ones. That is a healthier environment than blind acceleration. Rental demand is a huge reason this matters. Even when transaction velocity cools, the city still has real tenant demand driven by professionals, relocating families, entrepreneurs, and global buyers who want income visibility before they commit more capital. That means strong buildings in strong micromarkets can stay resilient even while the overall conversation gets more cautious. This is why the ready home shift matters so much. If about 60% of buyers prefer ready property, that tells you certainty now carries a premium. Investors want to inspect the actual building, verify the finish level, see the true view, understand service charges, and evaluate real rentability instead of buying a story from a brochure. That shift is not negative. It is rational. It also creates negotiating leverage. If transaction velocity is softer but serious buyers are still in the market, the edge often goes to the person who has financing clarity, a defined brief, and the patience to compare multiple buildings instead of chasing one headline listing. In other words, a smarter buyer's market does not mean everything is cheap. It means the spread between strong assets and weak assets becomes more visible. So where should investors be paying closer attention right now? I think this environment still favors communities with broad tenant demand, strong daily usability, and clearer exit logic. Business Bay remains important because of its location and professional tenant base. Jumeirah Village Circle can still perform when the building quality and service charge profile are right. Dubai Hills Estate keeps attracting end users and families who care about lifestyle depth. Dubai Marina still has liquidity, but building selection matters much more than area branding alone. And selected pockets of Aryan, Al Furjan, and Dubai Creek Harbor can make sense where pricing is realistic and handover visibility is good. Now here is the trap. During a recovery narrative, buyers often overreact in two different ways. The first group freezes and waits for a collapse that may never come. The second group rushes into anything that looks discounted. Both can lose. If you want to win during Dubai property market recovery 2026, you need to focus less on cheapness and more on quality at a better entry point. That means asking harder questions. Is the building actually rentable at the asking projection? Are service charges manageable? Is the layout functional? Is there too much competing supply nearby? If this unit sits vacant for a period, does the deal still work? If appreciation slows, does the income still justify the hold? Recovery phase investing is underwriting work, not wishful thinking. I would frame the market in three buckets right now. First, ready property with proven tenant demand and visible operating reality. Second, near handover property, where delivery risk is modest and the income story is close. Third, off-plan property, where the only reason to buy should be a very clear pricing edge, a strong developer, or a payment structure that genuinely improves your capital efficiency. In a more selective market, bucket 1 deserves the most attention, bucket 2 can work well, and bucket 3 needs much stricter filters. There is also a deeper strategic point here. A market recovery is not just about whether prices go up next month. It is about whether you can enter cleaner, hold safer, and exit into real demand later. If you buy a well-located, well-run, rental-friendly asset while sentiment is more cautious, you're not just chasing rebound upside. You are stacking multiple forms of protection. So, what should investors do now? First, define the mission. Are you buying for yield, residency, capital preservation, or appreciation? Second, narrow your search to a few micro-markets rather than the entire city. Third, compare ready and near-handover opportunities side by side using real rent assumptions, not optimistic marketing math. Fourth, negotiate with evidence. And fifth, move when the deal still makes sense after you remove the rosy assumptions. The biggest winners in Dubai property market recovery 2026 will not be the loudest buyers. They will be the clearest ones. If you want Astra Terra Properties to help you compare stronger opportunities, negotiate better entries, and shortlist Dubai assets that match your risk profile, visit Astra Terra AE or message us on WhatsApp today. And for your next video, watch our buyer's market breakdown or our rental yield guide.